Okay, so you can see, AMD has made it a nice move through the whole year. I mean, it went from around 80 all the way up to over, I guess, 132 was the actual high. Now, what I look for in a short, and it would be number one, 3 months from the top. So the stock has been going sideways for at least 3 months. Because when a stock is, if you're trying to short a stock that's hitting new highs and it's been a very, very strong stock, your timing has to be absolutely perfect. And what happens if you try to short too early, there's always people who say, oh, I've never been able to buy this stock. This is my chance. This is my chance to buy it. And so in the first few months, every time it pulls back, there's people that just run it back up. Now, oh, I got my dog walking in here.
Oh, hey, puppy.
Bruin,
Hello.
hey. Yeah, he guards the door.
Bruin, you said?
Yeah, Brewin.
Yes,
I'm a
the coffee
UCLA.
thing.
I'm a UCLA Bruin, but yeah, we've had dogs with coffee names, but the kids started that. Anyway, so you want to look at 3 months from the top. Another characteristic is you want the stock to be under the 50-day, and you can see that the stock, the 50-day is rolling over. Then also, if you look at what happened between 132.83 and 107, I counted 7 days in a row down, and you'll see the volume pick up there. And so that's it's kind of a reverse ants. You get 7 days in a row and the volumes there, what's happening? That's probably institutions that are starting to sell out of their position.
Are
And
those
then,
fire ants, David?
yeah, fire ants, red ants, the ones that bite, you want to be careful of those. And then when it tried to rally, you'll see that when it rallied up to 122, it got maybe 1 day of above average daily volume. And then it gapped down twice right after where where it gapped down through the 50-day. It tries to go back up, it gaps down on earnings, and then it rallies back up. And that's where I put on my first short after it rallied back up to those highs. So those are kind of the long-term things that I look at. And if you now go to the example, you'll see that
So this is that earnings, that ugly earnings.
yeah, okay, so the
day.
earnings were reported, and so the next day it opens and it falls fairly dramatically. And if you could come move it, yeah, so they can see that whole thing. So then it gets hit on some very, very big volume. Then it rallies back up, and I guess it's a 3-day rally that it takes it to get back up there. But then you can use RSI, you can use stochastics, but I like to look at some kind of type of momentum, and you'll see that the momentum of this coming back up to the high did not exceed, and so they call that a non-confirmation. So then the stock starts down again, and where do I cover? Well, I first cover, you'll see where I covered the stock.
So you were short, like, did you have a trend line from the, connecting these lows, and then when it started to break that,
I think I took
on the short?
I took a small position, maybe a few hundred or a few hundred shares when it got back up to that, back to those highs. Then when it started coming off and breaking, that's where I really pushed the short and increased the position. And these are all very short term. At some of these things I don't stay in for longer than 3 or 4 days. A few I've been in for weeks, but then it came down, and when I got it's close to 10 points, or maybe not 10%, but 10 points on this move down, and look where the stochastics went. They went back below 30. Then I covered some. I didn't cover the whole position, and then when it came back down there again, farther down, yes, then I covered everything but I think 100 shares. So I kept an eye on it, rallied back again, shorted it again, and might have mentioned that a few, last week or so. Then it comes down again. Stochastics come down again. You're looking at a 60-minute chart. And so covered again down to 100 shares. And then I've actually shorted a little bit more back again for the third time on this rally. Now this doesn't include this morning, but this morning it opened up and it was as high as 109 and started coming back in. And you could maybe go to the 60-minute on that. And
shorting in here.
Yep.
In here, covering here.
And then covering some more there, shorting back at 112, covering back at 104, 102 area. That was the Friday when everything was down. So now you've rallied for 2 or 3 days, and look what you rally back into. Draw a line at 110 all the way back. Look at all that overhead. It's going to take a lot for that stock to get up and through that 110 area. And so that's kind of that's what I'm looking for. So I give you the longer term, 3 months, moving averages, moving down or starting to roll over, a multiple days on the downside, larger volume on the downside, stalling days when it rallies, light volume when it rallies. And then you get like the 21-day going through the 50-day. And you just look for those light volume wedging rallies, and that should put your odds in favor of a stock that could be shorted.
Mm-hmm. Was it also a signal for you, David? Those couple of days that it tried to poke above 120 before you ended up shorting later, before it started living below the 50-day, that it had weak closes?
Yeah, you're looking for days where it trades higher and closes near the lows. That's always a great sign. You'll see that happening a number of times.